Let us now talk about accounting and reporting. Accounting is a field that has subsections or sub-areas. Major subsections or sub-areas of accounting include financial accounting and reporting, management accounting and cost accounting, which is also known as costing, and auditing. If you were to expand it further, accounting also includes tax accounting, public sector accounting, and the latest addition, the forensic accounting. For this short course, we will be focusing only on financial accounting. In a business entity, the three major areas usually apply, especially for a corporation where funding is coming from the public, thus require greater accountability and reliable reports. Financial accounting and reporting records economic transactions of the business in its books of accounts. The activity of recording transactions is called bookkeeping. From these records of transactions at the end of a financial year, a business entity will produce financial reports for external parties that are called financial statements. These include income statement, balance sheet, statement of changes in equity, and cash flow statement. These financial statements will then be audited by external auditor to confirm that the information in the financial statements are true and fair and reflect the activities of the business throughout the year. The audited financial statements will then be presented to interested external parties such as potential investors, financial institutions, other businesses that want to be suppliers to the business, and also government for the purpose of tax. Regardless, these are the only reports provided by a business entity to external parties to summarize its financial well-being within one financial year. Internally, business entity will apply management accounting and costing. It is also known as managerial accounting, where it produces internal reports. There are various in numbers and types depending on the need of the internal users like sales manager, production manager, chief financial officer, and many more. Examples of such reports include reports on its costing, calculation and recording of costs, reports on budget, forecasting, investment, and determinations of price. These reports will only be made available to internal users. From these statements, the income statement, the balance sheet, and the statement of changes in equity are the main statements that are prepared for external users, providing them with the necessary financial information of the business. The last statement is somewhat a reproduction of the information in the three statements in terms of cash flows. This is a sample of an income statement. Income statement provides information on the business's income and expenses and the results of the business activities at the end of the financial year in terms of profit or net income or loss. In the sample statement, the entity has a profit or net income for the financial year ending 31st December 2022. Balance sheet, or also known as Statement of Financial Position for corporation, provides the information on the business financial position and well-being at the end of its financial year. The business financial position is represented by the assets, liabilities, and equity of the business, as shown in the sample statement. As for statement of changes in equity, it shows the movement in the equity of the business. This equity statement provides information on transaction between the business and the owner of the business, that is, between Izhar, the owner, and its business, Easy Enterprise, for example. The capital represents investment by the owner into his own business and the income generated by the business to increase the wealth of the owner. And drawings or withdrawal by owner representing the owner taking out his investment, either cash or other items, from his business for his own personal use. From the three main statements, you might realize that there are groups of items presented in these statements, 5 of them to be exact: assets, liabilities, equity, income, and expense. Remember when we discussed the recording of transactions under the rules of accounting earlier? We mentioned that the information recorded shall be classified and summarized in useful format. These 5 groups is what we refer to as the classification. And in accounting, These 5 groups are known as the elements of financial statements, simply because the financial statements are consisting of these 5 groups of items or financial information. It is therefore crucial for the preparer of financial statements to be able to classify items in business transactions into these 5 elements. Failing to do so will result in incorrect information being presented and delivered to users. To illustrate the importance of understanding these elements, let us have a look at this chart. We have a sole trader or sole proprietorship, a partnership, and a corporation, all 3 major business entities. As we've seen in the sample financial statements, we have only 5 elements: asset, liabilities, equity, income, and expense, represented by each bowl. Transactions from a sole trader will go into these 5 bowls. Transactions from partnership will also go into these 5 bowls. And transactions from corporation, no matter how complicated they are, no matter how huge the amount may be, will still go into these 5 bowls. So you see, it is very crucial that we understand what these 5 elements are, so that when we want to record a transaction, we know where to put the item in or how to classify it. Is the transaction involving asset, liability, equity, income, or expense? Therefore, whenever we want to record the transaction, we will ask the questions of which element or elements involved in the transaction. To end, these 5 elements are also the very foundations of bookkeeping, which relates to another core of accounting and bookkeeping, which is the accounting equation. In the coming topics, we will discuss the 5 elements of financial statements and then move on to the accounting equation before discussing journal entries. Before watching the next video, discussing the next topic on the elements of financial statements, do try the assessment provided for you in this section to test your understanding of the topic. Feel free to re-watch the video if you think you need to. Until the next one, thank you for your attention and wassalamualaikum warahmatullahi wabarakatuh.